Welcome back, it's Jason Walter here. According to Redfin, here are the cities that are at the biggest risk of a housing market downturn if we go into recession. Also, the biggest risk of home prices declining over the next 12 months. This is according to a report from Redfin. Topping the list was Riverside, California, and that was followed by Boise, Idaho, Cape Coral, Florida, Northport, Florida, and Las Vegas, Nevada, as well as Sacramento, California. So these cities here that I highlighted in yellow, I actually made a separate video regarding the latest housing market trends we're seeing right now. So I'll leave separate links to those videos below. But in today's video, I want to go over Cape Coral, Florida, Tucson, Arizona, San Diego, California, and Jacksonville, Florida, because these are topping the list according to Redfin that we're going to be seeing a housing market downturn in these cities if we go into a recession. Now, I know what you're thinking. There's a lot of talk about, are we currently in a recession? Are we headed that way? But that's not the topic of today's video. This is just discussing the cities that Redfin is saying that we're going to be seeing the biggest risks of a housing market downturn over the next 12 months. So let's first talk about Cape Coral, Florida, and let's have a look at the latest trends according to Redfin here. So Cape Coral, Florida, let's first talk about new listings. Then I'm going to be going over pending home sales, as well as price drops, as well as active listings or housing inventory for each of these cities here, by the way. So again, this is for Cape Coral, Florida. The black line here is for 2022. The orange line is 2021. And the blue line here is for 2019. I think all of us would agree that it's best to exclude 2020 due to the onset of this pandemic. So new listings in Cape Coral, Florida, which, by the way, actually I had to look this up. Cape Coral, Florida is basically right next to Fort Myers, which is south of Tampa, and also basically northwest of Miami, Florida. That's where we're at here. So right now, new listings are actually down 6.2% from the same time period last year. We're actually below 2021's levels, but above 2019's levels. So let's have a look at pending home sales. Pending home sales, wow, look at that. So pending home sales have basically been decreasing more or less ever since April. So right now they have, wow, look at that. So they have 35% less pending home sales compared to 1 year ago. Of course, a pending home sale is when a home seller accepts an offer from home buyer. I know I mentioned that every single video, but in case you're new here, I don't want to confuse you guys. So pending home sales decreasing greatly. Look at that, down 35% compared to 1 year ago. But look at this, back in April, they were only down by 4% compared to 2021. So a big dip in contracts signed there. So I'm guessing they're going to be seeing this giant increase of active listings or housing supply. Yep, take a look at that. So housing supply right now, the black line right here, we're actually up, wow, look at that, up 46.88% compared to 1 year ago. So they basically have 47% more houses for sale right now in Cape Coral, Florida, compared to the same time period in 2021. But have a look at this. Back in April this year, we basically had the same number of active listings compared to 1 year ago. But now that trend has basically skyrocketed. Now we're up 47% compared to 1 year ago. One thing I want to mention, I've been mentioning this on the channel quite a bit. I'm guessing that even though they have far less active listings compared to 2019, which is obviously pre-COVID, I'm guessing we're going to be seeing a lot of price reductions because we're seeing this giant decrease in pending home sales. And despite that, we're seeing this increase or giant increase of active listings. So right now they have 4,400 houses for sale in Cape Coral. But look at this compared to 1 year, or not 1 year ago, compared to 2019. They had 8,419 houses for sale. So basically have half as many houses for sale compared to 2019. But that doesn't matter because look at this. We basically weren't even 3 months ago, but now we're up 47%. I say we, I mean Cape Coral, Florida. Let's take a look at price drops. So active listings up greatly and pending home sales are down greatly. Price drops, boom, look at that. That's crazy. So basically up big time there. So price drops right now are at 9.6% by week, but 1 year ago and also compared to 2019 as well, it was only 3.8%. So in 1 year, we went from 3.8% all the way up to 9.6%. So in other words, the share price drops have almost tripled compared to 1 year ago. And by the way, for whatever reason, Redfin shares this share by week. So 9.6%. You basically have to multiply this by 4 or 4.33 in order to get the approximate share of price reductions by month. So if you actually do that, that number is actually 41.5%. So in other words, approximately 42% of active listings right now have had price reductions in Cape Coral, Florida, despite the fact that we have far less active listings compared to 2019. So with that said, let's look at prices in this area here. So let's look at the asking price, or the median asking price in Cape Coral, Florida. Take a look at this. So right now, look at that, up 28.30% compared to 2021. This is also far less than the summer though, or the spring months though, because back in basically March and April this year, that share was over 35%. So the asking price, or the median asking price of a home in Cape Coral, Florida was up 35% year over year this spring. Now they're only up 28.30%. Obviously much higher than historical national averages of 3 to 6%. So again, not sustainable, right? These are asking prices though. So let's have a look at sold prices, which again is a lagging indicator. But take a look at that. Wow, look at that. So the median sold price right now is $408,000, up 28% compared to the same time period in 2021. But look at this compared to 2020. I mean, I'm just curious. I haven't even looked at this yet, but I just want to see what this looks like. So in 2020, or 2019's right here. So 2019 at this time, the median sold price was only $234,000. That was only a 3% increase compared to the same time period in 2018. And fast forward to 2020, the median sold price was $254,000, up 8% compared to 2019. But look in 2021, up 25% compared to 2020. Now we're up 28%. So basically in 3 years in this city here, or this metro, they went from $234,000 was the median sold price. Now it is $408,000. And like I mentioned in my previous videos, if you're a home buyer looking at this is very discouraging, right? It's obviously a step in the right direction where home prices have started to decrease just a little bit. But the median sold price back in May and the early parts of June was $421,000. Now it has decreased to $408,000. So in other words, home prices only decreased by about $10,000 compared to 1 month ago, where we're seeing giant gains over the last 3 years. So that was Cape Coral, Florida. But let's have a look at Tucson, Arizona, because that was one of the cities that Redfin is calling out for home prices to decrease over the next 12 months if we go into a recession here. So let's first talk about new listings in Tucson, Arizona. So new listings are down 9% compared to 2021, but basically on par with 2019's levels. So we have less new listings. Let's have a look at pending home sales. So pending home sales are actually down 10.22% compared to 2021 though. So pendings have been decreasing really ever since May in Tucson. Let's look at active listings though, or housing supply. Look at that. So housing supply only is up 5.75% from the same time period in 2021. They basically had the same number of active listings for the 4 weeks ending June 6th of this year, but now up about 5.7%. So a very small increase of active listings in Tucson, Arizona. And right now they have 3,238 listings right there. But in 2019, this time, they had 4,500. So about 1,000 less houses for sale compared to 2019. Let's look at price drops though. Price drops, wow, look at that. That's crazy. So price drops are at 7% right now. In 2021, it was 3.2%. So basically in 1 year, they went from 3.2% all the way up now to 7%. So the share of price reductions has basically doubled, even though they have far less houses for sale compared to 2019. And again, by a month, the share of price reductions in Tucson, Arizona is approximately 28%, or almost 30%, let's say. Let's have a look at home prices in Tucson, Arizona. So let's look at the median asking price in Tucson. Look at that, up almost 20% compared to 2021. The median asking price is $376,000 and basically going up ever since January 1st of this year. To me, this is very telling because the asking prices for houses for sale in Tucson, Arizona has more or less been flat, but they're seeing this giant increase of price reductions. In other words, sellers have not gotten the memo that the housing market is slowing down here because price reductions has basically been going straight up ever since March of this year, but asking prices over the past couple of months has been slightly increasing. So let's have a look at the median sold price in Tucson. So the median sold price has also been flat over the past couple of months here, basically up 17% compared to the same time period in 2021. And in 2021, they were up 21% compared to 2020. Here's something I also found to be very interesting when I was kind of fiddling around with this Redfin housing market website here, or this Redfin housing market data website. Take a look at this because in Tucson, the average sale to list price ratio in Tucson is basically 100%. In other words, a ratio of 100% for this ratio here, of course, means that home sellers are selling their houses for their asking price on average. But look at this compared to 2021. At the same time period in 2021, that ratio was actually 102%, or 101.887%. In other words, 102% rounded up. So 1 year ago, home sellers were selling their houses for 2% over their asking price. Now they're selling it on average for their asking price. Now, what really caught my attention are two things regarding this here. Because this ratio here has basically been falling off the map ever since June of this year. So this is a vastly different compared to 2021. We basically had this slowdown, but right now it's basically going straight down. Also, number two, in 2019, which is this blue line right here, we didn't have any single month where houses on average were selling for over their asking price. So the ratio at 1%, the trend line right here is right there. So this is the trend line right here where anything above this line here is basically means that home sellers were selling their houses for over their asking price. And anything below this line basically means that home sellers were selling their houses for less than their asking price. So back in 2019 this time, home sellers were selling their houses for 98.5% of their asking price. And on top of that, there wasn't a single month back in 2019 where the ratio actually went over 99%. Okay, changing gears slightly, let's talk about San Diego, California. Absolutely love San Diego. Actually lived in Del Mar a long time ago back in college for one summer. Had a great time. Anyways, that has nothing to do with the housing market though. So let's take a look at San Diego. So let's look at new listings. Look at that. New listings are actually down. Wow, look at that. Down almost 27% from 2021. A big decrease right now. Let's look at pending home sales though. Pending home sales are down. Look at that. Down 39% from 2021 as well. Also far less in 2019. It has been leveling off over the past few weeks. But again, this is a short-term trend. We'll have to see if it becomes a long-term one. But down greatly. A big difference compared to basically March of this year when we basically had almost the same number of contracts signed compared to 2021. But ever since then, the trend line has basically been falling, whereas in 2021, it basically increased through June of last year. So pending home sales are down almost 39% from 1 year ago. Let's look at active listings though. So active listings, look at that. Active listings are up 8.73% from 2021. So we have 5,131 houses for sale in San Diego compared to 8,653 in 2019. So far less houses for sale compared to 2019, but about 9% more from 2021. So let's look at price drops in San Diego. So take a look at that. Even though we have far less houses for sale compared to 2019, price drops are through the roof at 9.6%. So in other words, on a monthly basis, the share price drops is at around 40% right now. Compare this to prior years at 9.6% by week. Take a look at 2021. In 2021, the share was 4%. Now it's 9.6%. So we have more than double the share of price drops in San Diego right now. So having said that, let's look at home prices in San Diego. Let's look at the median asking price. The median asking price is 11.47% increase from 2021. I'm guessing it was a lot more than that. Yeah, it was a lot more back for the 4 weeks ending May 22nd of this year, up 18.5%. Now we're only up 11.5% basically. So asking prices in San Diego, California have basically been on a declining trend basically ever since May of this year. So even though asking prices have been decreasing, price reductions have been increasing greatly as well. So let's have a look at home prices for houses that actually have sold. So houses right now, the median sold price, I should say, is $841,000. That's a 10% increase from 2021. But look at this though, in 2022 at this time, again, 841,000, but at this time in 2019, home prices were at $585,000. So in 3 years, the median sold price went from $585,000 all the way up to $841,000. So let's have a look at the average sale to list price ratio in San Diego. So the ratio right now is basically 100%. So on average, home sellers selling their houses for their asking price. But look at 2019, just like we saw in Tucson, Arizona, in San Diego, we didn't have any single month where the share was actually more than 99%, or the ratio wasn't anything more than 99%. So in 2019, on average, houses were selling for less than their asking prices. Not too much lower though, I should say, because the range was about 98% to almost 99%. But this is obviously far different compared to 2021 and also 2022, where every single month the ratio was at 100% or higher. But it's very interesting to see that this ratio has basically been decreasing ever since April of this year, which, by the way, that was when the average 30-year fixed mortgage surpassed 5%. This is obviously far different than 2021, because in 2021, this ratio here didn't start decreasing basically until June. And now we're seeing this trend line decrease much earlier compared to 2021. Okay, changing gears slightly, let's talk about Jacksonville, Florida here. And let's first talk about new listings. So in Jacksonville, Florida, new listings are actually down 6.9% from the same time period last year. But let's look at pending home sales. So we have less new listings hitting the market, but pending home sales have fallen. Look at that. So down almost 30% from the same time period in 2021. But look at how this varies compared to 2021, because we basically had the same number of pending home sales back in February and March of this year compared to last year. But now we're down greatly, down almost 30%. So I'm guessing because we're seeing this pull back in home buying demand, less contracts are being signed, they're seeing an increase of active listings here. And again, I have not seen this yet, but active listings are actually up almost 9% from the same time period in 2021. Whereas right here, which was the 4 weeks ending June 13th, they basically had the same number of active listings compared to 2021, but now they're up 9%. So right now they have approximately 6,200 houses for sale in Jacksonville, Florida. Compare this to 2019, they had 9,539 houses for sale compared to 6,000 this year. So we have far less active listings right now compared to 2019. So let's have a look at price drops. Price reductions, look at that, at 9.6%. Compared to 2019, it was 5%. But look in 2021, the share was 3.8%. So right now they have 9.6% is a share of price drops by week, far higher than 2019 and 2021. So I'm guessing because the share of price drops right now is basically skyrocketing. It has been leveling out over the past couple weeks here, but of course much higher compared to the past few years here. So let's look at home prices. Here's the median asking price. Basically, it has been flat. So this is one reason why we're seeing this giant increase of price reductions, because home sellers have not gotten the memo that the housing market here is slowing down. It's basically flat over the past several months here. So let's look at sold prices. I'm guessing it's going, wow, they haven't gone down. That's interesting. So the median sold price in Jacksonville, Florida has been on an upward trend. It's not showing any signs of slowing down, which is I'm kind of scratching my head regarding that, because home prices are up 24% compared to 2021. And so that's really interesting, because why would they see a giant increase of price drops if the median sold price is increasing? So I'm guessing this is going to be a tale of two stories. There's going to be, I'm just thinking this out loud. So I'm guessing there's a lot of home sellers that are basically overzealous. Their asking prices are far too high. Therefore, they have to reduce their asking prices in order to attract a home buyer. In stark contrast, though, I'm guessing there's probably a lot of home sellers that are pricing their houses right, and that's why we're seeing the median sold price increase. So besides that, I'm kind of scratching my head regarding why is the median sold price in Jacksonville, Florida increasing. Another theory I have is that potentially they're seeing more houses selling in the upper range compared to prior years. So because the median sold price is $381,000, it has been increasing basically every single month of this year. Potentially they're seeing more houses selling for over $381,000, and that's why the median sold price is increasing. But of course, this is just a guess, but what do you guys think? Comment below. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and I look forward to seeing you on the next video.